Welcome to the Vault, where Central Illinois' best-kept stories are held.
Welcome back into the Vault, folks. I am Nick Gentile, here with my co-host John DeFreitas, and today we are here with a very good friend of ours, Jerry Boster, Senior Vice President of Mortgage Lending here at Prairie State Bank Trust, and also the current President of the Springfield American Business Club.
Correct. Thank you.
Did I get that all right?
Yes, sir.
All right. Awesome. Jerry, give us some background, man. How did you get into mortgage lending, and where are you from? All those things.
Well, it goes back. I don't want to go back that far because I'm old. So
Okay.
we don't want to get too carried away there or anything like that. But I basically, I was in the car business and ran a part-time realtor for years. Now been in lending, just where that's all I'm doing now. Of course, is lending out of everything else for the last 20. So worked at a couple different local banks, a couple bigger banks, national banks, so on and so forth. Back earlier in my career, things like that, until I finally found my home about 8 years ago here at Prairie State Bank.
8 years. I didn't know it was that long. That's awesome.
So, been a minute. So, but I always, not to say that I'm the best of everything, but I have a lot of, with age comes experience, or experience comes age, whichever one you would say. But it does really help because I've seen both sides of every possible transaction. I'd probably say I've seen any credit situation or any employment situation that there ever is. So nothing really surprises me anymore. We'll put it that way.
Yeah. Where'd you grow up?
Girard.
Girard? All right.
Big city of Girard.
All right, so not too
Big
far
Red.
away.
And, back before they merged with Verdon, and now of course they're the North Mac Panthers. But
Nice.
that's a whole different
Man,
story.
you migrated all the way over here to the big city. Good
Yes,
for you.
yes, I've never really left the immediate area here, and just live southwest of town here now. So
Cool.
pretty simple life.
Yeah.
Pretty simple life in general. So
Tell us about mortgage lending. Tell us how you got into that. What's rewarding about it, and what keeps you going? Because you've been doing it for a long
of course,
time.
the biggest part about mortgage lending is the idea is that you're helping a customer, whether that be in their first home, or maybe it's a refinance to get them money out, cash out to do something else, home improvements, bill consolidation, whatever it is. So, from the first time home buyers are always the most rewarding because it's allowing these folks to have the dream, make that dream real,
Right.
of owning their first home. So that's by far the most rewarding part of it. I will say, there's ups and downs. There's a lot of misconceptions. I always say, well, they don't teach kids anything in school. Now, I sound like an old man here again, but it's true. In general, most, what I say, young people, between 20 and 30 have no concept of credit or anything like that, what it takes to keep good credit, get good credit, etc. And that's such a huge piece in owning a home. It's really changed a lot. It's changed a lot over the last 10 years, let alone going back the last 20 to 30 years like that. But I guess if I could change anything, I would go back and teach these people, make them teach a class in school, a real class about credit and what it really affects things. Especially it's gotten so much stricter in the last 3 or 4 years as far as credit qualifications. I mean, it used to be we thought a credit score of 20 years ago, we thought a credit score of 700 was great. Now an ideal credit score is something over 780. A very small percentage of people actually make that 780 credit score to actually get the very best terms on a mortgage loan. But that's where you have to be. The whole adage, 20% down. Now the ideal is 25% down. To get those very best terms on a mortgage loan. So that's really changed things. And there's so many misconceptions in the media. As far as that. How much down payment you have to have. In reality, I mean, most borrowers, not even being in a rural area or a veteran, especially first-time home buyers, a lot of those can do 3% down and qualify for a loan, a mortgage loan. There's so many misconceptions about private mortgage insurance and things like that, where it's like, oh my gosh, I can't have PMI. It's so horrible. It's just life. I look at it this way, and and the PMI rates have really actually dropped quite a bit.
Yep.
And here again, it's all credit score based. So I just had an instance where I ran one where his PMI was actually a little higher, because his credit score ended up being 794 instead of 800. Well, here again, you're talking a whole new threshold.
Wow.
Now, it didn't. It was only $3 a month, $3 or $4
Sure.
a month difference. So it really had no effect on him personally and his whole deal. But it's just crazy the differences in how things have changed throughout the years with all that. So down payments and et cetera. So there's also briefly there's grant programs out there. The grants are basically for low to moderate income borrowers. So that's it's a big deal. A single person in Sangamon County, you need to make under around $54,000, is right in that range. Those thresholds change every year, and it does vary by county. So it goes to the low to moderate income ratios that are put out by HUD. And so if you're in Morgan County, you actually have to, those thresholds are lower. So that borrower might have to be at like under $40,000 a year to qualify for a grant. And there's also a new program out there through Fannie Mae for very low income. Well, very low income here again varies by county. So in Springfield, that's Springfield, Sangamon County, that's extra $2,500 is available is for anyone that makes under $52,000 of total household income. Okay. If we're looking at the other down payment assistance program, which is through Federal Home Loan Bank of Chicago, it's a $10,000 grant. So,
wow.
If everybody clicks on all right things, and I have one of our employees right now. I'm looking at, they're under that threshold. So, first time home buyer. So this person will qualify for $12,500 in grants.
Oh, wow.
That's
So
fantastic.
that's a big chunk, and that can cover closing costs and down payments. So in a case like that, the person just has to have $1,000 out of their own pocket, and they're buying a house.
Wow.
So
How do those typically work? It's been some time since I've looked into those, but is it usually you need to stay in the house for a certain amount of time?
yeah, the one through Federal Home Loan Bank of Chicago, it's a 5-year retention period is what it is. So one thing good about that program there is, let's say something happened, you had to sell your home or something like that. You may not have to pay that money back unless you're actually making money on the sale. Here again, we don't know that. We always tell people that it's forgiven over a 5-year period,
Right.
so at 1/60th per month. But I have seen several instances where someone had to sell. Maybe they got transferred or moved or something like that. And if they sold their house and not made money, they just asked for verification of what they sold the house for. Okay, that sometimes that money has been, down payment assistance has been forgiven. So every situation is different.
Yeah,
but
right.
It's definitely a huge deal when we can find those borrowers to qualify. And the more people in your family, the higher those income limits. Unfortunately, they're not always proportionate.
Yeah.
To what it. If you have 2 people in the household that are working, it gets a little bit harder to qualify for some of the grant programs and stuff like that. So.
Yeah, I remember when my wife and I bought our first house in Champaign, we saved up for, a while, a year or a couple of years, whatever it was. And I used to carry the receipt from the cashier's check in my wallet because I thought it was so funny. But with all the programs that we qualified for when we bought that house, I think we brought $900 to the closing each of us.
Yeah,
did.
there was another.
Like,
there was other
we bought
programs out there. Yeah, that literally you could.
It was unbelievable.
Yeah,
I just couldn't
how
believe that
cheap.
we saved up and we ended up not using all of it because we had qualified for a couple of different programs, I think. And part of that was we had to do some training. Is that still pretty common with those programs?
Yeah, they still have to go through, do some classes online and
Right.
some over-the-phone counseling
Right.
and things like that, which is good. I mean,
Yeah.
basically that's the only way they learn about
Yeah.
this, and
Yeah, I thought it was
the
helpful.
ins and outs of owning a home.
Right.
It's not like you're renting. So
Yeah.
if your water heater breaks, you just call your landlord. Well, your water heater breaks at the house you own.
Right.
You're paying to have it fixed yourself. So and all that really does take a lot more budgeting. They teach you about budgeting in those classes
Yep.
and stuff like that.
Yeah.
And sometimes people just don't think about that kind of stuff. Well, what if something breaks? Well, my payment's only such and such, but what if something breaks?
Yeah.
And something's going to break sooner or later. That's all there is to it. So.
Yep, it happens.
So what's some of the biggest changes that you've seen over the years in mortgage lending?
I mean, one of the biggest is just credit qualifications. And, of course, we've the whole industry is cyclical. There's no doubt about it. I mean, everybody complains about rates are high now. That's only because they went through a period of time, so many of us did, where rates were really artificially low. And I told people that even, we really saw really low rates even in 2012. We saw them, where they were in the threes. 30-year money was in the 3% range. So they went up 13, 14, 15. They dropped again in 16. They were back down in the threes again. Of course, and we all know what happened during the COVID times in 2020, 2020. I'm sorry, I can't talk. 2020, 2021.
Yep.
When there's some 30-year money out there in the high twos. Which was just insane. But now that we're seeing rates up and things have kind of stabilized over the last 12 months, where we haven't really seen much movement. But so we're in the sixes, mid sixes or 7 right now. This is the same way. This is the same cost of money that I literally seen 30 years ago. I mean, I can remember when I purchased my own first new house was 1994. I built a new house, and rates had got down in the sixes, and man, I was just thrilled to death because when I did my construction loan, it was like 9. So rates had dropped. They're into 94, early 95. And to see that change, and now people say, "Oh, they're so expensive." I mean, it's just life. That's all there is to it. So, people just have to realize that, that's just the way it is. You got to pay for it. That's what it is.
Yeah.
One of the biggest misconceptions that we get, which is just so hard, and the media is trying to do a little bit better with controlling it, is how mortgage rates are based. Everybody sees what the prime rate is. Prime rate and mortgage rates really have very little to do with anything. Mortgage rates are based on 10-year treasuries. That's just all there is to it. So if you really want to follow the market and learn more, look at 10-year treasury chart and look at the ups and downs over a certain amount of time. Sometimes we can see an 8% or a 1/4% swing in mortgage rates in a day. They might open up at 1 and they may lower or raise 1/8, 1/4.
Yeah.
So a quote in the morning may not be any good at the end of the day.
Yeah.
And it might very well go up or down the next day. We just don't know because it's just look at a graph sometime and see how crazy it is like that. Where prime is advertised, and that's what everybody sees. So
right.
And actually the funny thing is prime first lowered back in September of 2024 here for the first time in several years. Instead of rates kept going up, prime did. And we actually saw our best mortgage rates in the last year and a half, the day before the Fed lowered prime. Since then they trickled back up, quite a bit. In fact, at a bigger rate than what prime was being lowered in some points in time, only to get back where we're at right now. So it's just it's interesting just to watch it and see what it does, and then everybody asks me, so what do you think? What do you think rates are going to do? It's like, I have no clue.
It's everyone's favorite question.
Every market guru there is out there, if anybody says that, that's going to happen, mortgage rates are going to be in the 5s by the end of the year. How many times they've been wrong? They're wrong a whole lot more than they're right.
Yeah, almost exactly 50% of the time.
Yeah, about like the weatherman.
Yeah,
it's about the same
right.
kind of thing.
Yeah.
Where else can you have a job where you can be right half the time? And still get paid.
Yeah,
so
that's a great point. Are you still seeing? One of the things that's talked about a lot, and I know people personally that are in this boat, but are you still seeing the market being relatively slow because everyone has those golden handcuffs with really low rates?
There's such a huge shortage of housing right now.
That too, yeah.
And that's basically because nobody, it takes those people to sell that $100,000 house to buy the 150, the 150 to buy the 200, and on up throughout throughout whatever price level it might be. And people are so stuck in their ways now. Well, I don't want to give up that 3% mortgage rate that I have now, and then buy a new house and we're at 6.5 or 7 or whatever it might be at the time. So that really slows down the market. It's also, the cost of labor has gotten so far out of hand, in a lot of ways. Well, there's no laborers, that's part of the reason. Materials have went up. Everything's went up. So it was just literally 10 years ago. If you wanted to buy a $300,000 house, you could literally say, okay, do I want to buy this $300,000 house, or I'll just build one? And you could actually afford to do it, and there wasn't that big gap. Well, now that to build that $300,000 house 10 years ago is now going to cost you close to $5. And then we have half of houses or duplexes, selling in the mid 3s, maybe even 4s now, which is just. It just kind of seems insane. It's all because of the cost of labor and materials is what's happening. So a lot of those people just aren't moving up. It's causing a decline in the market. Unfortunately, first-time home buyers are really struggling to find anything. That's why you do see on the news that a lot of them have just given up and said, hey, I just have to rent. But, then again, I'll always say is not everybody's meant to be a homeowner. I hate to say that sometimes because that's the American dream to own a home. But, I have no problem sitting down with someone and look at their financials and saying, okay, should or you shouldn't be buying a house. If I look, people don't change their spending habits is what happens. So if I'm looking at your spending habits and I have to get your last couple months bank statements and I see you're not saving a nickel every month, it's whatever comes in goes out. You may not be a good candidate to own a house because you have to change your whole entire lifestyle to do so. And then of course the other things I see is it's gotten worse is credit card debt has just gotten out of hand. It's just everybody thinks they need this and they see more stuff on whether I don't know.
Did you see a difference between after COVID when there was more money in the market, more money in the world? People had it from staying home, from stimulus and things like that. Did you see credit card balances going down and now they're building back up?
I definitely seen it. Whenever people weren't spending money, some people say, well, the government incentives is what caused inflation. I don't believe that. What caused the problem with people not having any money now is they went through a time period where they couldn't spend. They just didn't spend their money, so they were saving their money. They weren't racking up their credit cards. Well, once it was kind of a perfect storm. Once everything opened up and you could get out and you could spend your money, well, people went out and spent all their money. So and then it's just gotten worse. That's just all there is to it. It's just it's a whole lot of keeping up with the Joneses. Well, my friend has this, and we want to go this, we want to do this, and that kind of thing. And it's hard, and that all goes back to my point where they don't teach basic budgeting. No one's teaching this basic budgeting, and I think that's a problem. Here, I sound like an old man.
But you're right.
It's definitely true.
Do you see though that what I've noticed is rents have gone up significantly also. Do you see where first-time home buyers are seeing a less amount for their mortgage than what they're paying for rent right now?
In some instances, it's not really as attractive as it was even 5 or 7 years ago. 5-7 years ago, I could almost always look at it and said, if I'm paying $1,000 rent, I could buy a house for $1,000 a month. That's a little harder, and there's so many factors. It's not just the rates that's doing that. It's insurance, it's property taxes, and that all flows together. That's.
Do you have to prep your people on their taxes and insurance pretty much? The taxes are almost guaranteed to go up, it seems like.
That I'm doing that on every single first-time home buyer. And I have the conversation with people all the time, and people always say, "Oh, I like this house because the taxes are only such and such." Well, that's all great. Now the taxes are, let's say, they're $2,000 a year, but I see that I look on the county's website; it's all public record. All you have to do is just look at it and say, "Oh, well, they only have the house assessed at $100,000. Well, you're paying $150 or $200 for it." Your taxes are going to go up 50, maybe 100%.
Yeah.
Whenever you buy it.
That's real money monthly.
Yeah, and that's all of a sudden it's a big chunk of money.
Right.
Especially that we get into $250,000, $300,000, $400,000 house, and you're talking a big chunk of money just for real estate taxes.
Well, and you don't know
what
what the exemptions they have.
Well, yeah,
right.
but it's all out there. I mean,
True.
I can look it all up on the
True,
county.
But most people just go to Zillow and they look.
Yeah,
at the
they
number.
just look at that number and they look at see what that payment is.
Yes, exactly.
And then I think whenever you look at Zillow calculates your insurance like being like $20.
Yeah,
and it used to be. I mean, literally, I would even say 2-3 years ago, I would look at the average house and I would maybe calculate the insurance being $800 or $1,200 a year.
Right.
Yeah, that was pretty
Now I look at it, and I mean, if you have a $250,000 house or something like that, I'm probably figuring more like $2,400 a year just for homeowners insurance. Loan I'm closing tomorrow. $60,000. He found a $60,000 house. The house in Waverly. Granted, it's just a small starter home, but his homeowner's insurance is almost $1,100 a year.
Wow.
Wow. So, but then again, they're insuring that for what it would cost to basically not the fair market value of it.
Sure.
Right.
Let alone, it's not full replacement coverage, because if you had to do the full replacement coverage on that, it was like $200,000 to rebuild that house.
Right.
That would make your insurance even higher.
Sure.
So it's just funny how it all rolls in. You talk about insurance and taxes, and I always joke with people. I said, when we're, all I do is fix rate loans, right? So this is your principal and interest payment. This is your escrow payment. Your principal and interest payment will never change.
Right.
Your taxes, your insurance are going to go up.
Right.
Just count on it now, and think about this accordingly. And I always try to tell them, I would give them an estimate, especially on the taxes, to make sure they know about where they're going to be, because it's such a big deal across the board.
So obviously, from this conversation, you could tell you do a lot of consulting with your clients as you're working through.
I sometimes I feel like I'm dad.
Yeah. That's fair.
That's what we call you around here.
Exactly.
Except for me, Grandpa.
Grandpa, right? Of course, because you're so young. But that's I mean, it really is. It's just a lot of. I would call it almost a lot of holding hands. And it's not. It's not always the people in their 20s and 30s. Mm-hmm. It might be people. That really just don't understand the lending process, don't understand credit, whatever.
I would say that's probably the biggest difference between commercial lending and home mortgage lending, is that you're dealing with a different level of people. Now, it's not that we don't get people, and even somebody who maybe has a house or had a couple houses, but this is their first business loan.
Yeah.
It's not saying that there's not going to be some counseling and hand-holding and things like that, but you're talking to people, like you said, that may have zero financial knowledge at all. I mean, that could be a struggle.
Yeah, and it definitely is, and a lot of it is. It's a whole lot easier if I can catch them early in the game,
Right.
Sure.
before they went out and bought a new car with an $800 month car payment, which is it's easy to do.
Oh yeah.
I mean, it's so easy.
Well, car
to do.
dealers are very eager to do that too.
Oh my gosh, and there's like no qualifications for a car loan. I mean, everybody says, "Oh my gosh, why do you have to have that?" I've had customers say, "I just bought an $80,000 car, and all I did is just tell them how much money I made," which the thing is, they probably lied about how much they make, because half the time they don't have to prove it for a car loan. When you're going to the dealer. Okay, they're just looking at your credit. Oh, you make that, unless there's some red flag, horrible red flag that pops up.
Next thing you know, they got a Hellcat.
Yeah, well, or it's just something crazy. Well, then all of a sudden they're looking to buy a house.
Right.
Maybe that's
I'm
where
asking for pay stub. I'm asking for tax returns, W-2s, whatever else that might be.
that's where the counseling should start, at the car dealerships.
Well, it should.
We should
but
put mortgage lenders in car dealerships.
It's probably
Well, you gotta go talk to
gonna
this guy.
happen.
No, don't buy that.
I mean,
You're going to want a house someday.
I will guarantee every car dealer, if I get a chance to talk to him first, the car dealer would hate me.
Yeah.
Because why you tell that guy he can't afford this?
Yeah.
Oh, you can afford it. Well, that's all fine and dandy.
Yeah.
The difference is a lot of times, and most of the time, the car dealers, once they sell them that car, they're out. They don't care what happens to
Right.
those people. I mean, I'm always I really am always looking out for my customers like that. And I mean, knock on wood, I've never seen a foreclosure on a house I've done because of, there's always some, maybe a death in the family or something like that might cause something or something like that. But as far as just bad lending practices, I just don't see it, and maybe I'm a little bit pickier than others, but I always tell people, if I do your mortgage, there's a good chance I'm going to run into you.
Right.
Again, it's not. I'm here in Springfield. You know what I mean?
Right.
It's a small town. You run into this people people you've done loans for all the dang time. I don't want to be that guy that they come back to, and it's happened in this area before, and say, well, you should never did that loan for me.
Yeah.
I can't afford this house.
Yeah.
I don't want to be.
I've heard people say that. Why did they lend me the money?
Yeah. Why did they lend me money?
If I couldn't afford it, why did they do it?
Yeah.
But
and you get back to the same thing is, you see on TV what's the max they can afford. Well, what do they go for? The max they can afford.
Yeah.
And I'm always, every one of my customers, if they don't own a home currently, is like, what do you think you can afford? Where do you think your payment? I don't want to tell you what your max is because on paper, I don't know every little bitty expense. I don't have to, I don't have to get into how much you pay for daycare.
Right.
God, what that costs. It's a small fortune,
crazy.
right?
Sure.
I don't have to get into how much your cable bill is, your phone bill, so on and so forth.
Yeah.
Well, all that stuff eats into your budget. If you get someone that's, what I call low to moderate income, it's a big chunk of the money they make, and I don't want to put that person, they seen their friends bought a $200,000 house, and I'm telling them, well, really, if you want that payment to be $1,000, you need to be looking at something under $100,000.
Yeah.
I mean, that's just all there is to it. So,
and from a business standpoint, it only benefits you and the bank to do what's right for the customer so that we can do their next loan. Like you said, as we're there, as they step up, they bring their deposit accounts. I mean, that's the whole goal of a bank is to have that full relationship for many years with their kids.
Yeah, and you want to see them. Like you said, there have been a lot of times, I've done a loan for mom and dad, and then when their kids got older, I've seen them come in, and most of our business here is it's really a lot of referral based.
Yeah.
It's always, who I know, and then who knows me, and who's done business with me that wants to come back and do business again. So it's such a big part of it, no doubt about it.
So tell us the difference between a home mortgage and an investment loan mortgage. So like for a rental, and why those look different and how you can do those with doing a long-term fixed mortgage.
And that gets interesting, and it seems like the people on the commercial side of the bank and then investors in general, they don't understand what it takes to qualify for that fixed rate loan.
Sure.
So I'll just give you an example. I can do fixed rate mortgage on a 1 to 4 family home.
What's a 1 to 4 family home?
So,
just to break it real low.
It can have 1 unit, 2 units, 3 units, 4 units in one, as long as it's in one building.
Right.
Okay. You can do up to 4 units.
So a fourplex.
Do up to our fourplex. Now, do we see very many of those? No, not in Springfield. There are a few of them. I can probably count on one hand how many fourplexes I've done, and where I've sent them for long terms, what we call secondary market fixed rate loans. But in theory, I can do them, but the customer has to qualify for that. And we have a whole different set of rules on, if we're looking at fixed rate financing, on when we can and can't count that future rental income.
Oh, okay.
The biggest thing is if you own rentals, if you already own a couple rentals and you're already showing you know how to manage rentals, and it shows up on your tax return that way, it's a whole lot simpler to buy that next rental. And you can have up to 10 finance properties with Freddie
Is it 10
Mac.
now?
Yes, 10.
Did that recently go up?
No, Freddie Mac used to always be 5, either
Okay.
5 or 6. I haven't dealt with Freddie in the last 8-9 years, but Freddie Mac, if you send your loans to Freddie Mac, that number is lower than if you send to Fannie Mae.
Right.
But that's it. So now that doesn't mean, in theory, you could have 30 rental properties that are financed and still buy a new primary residence. But if you're going to buy a new rental property, then your max amount of finance properties is 10.
Including your current primary.
Including your current primary.
Gotcha. Okay.
Correct. And so those regulations are different. And then if you own that current rental property, you're buying a new one, well, then we can use that future income to offset that new payment partially. We have to use 75% of that number.
Okay.
So if you're going to buy a rental and it's rent for $1,000 a month, we can use $750 a month as income to hopefully offset at least a good portion of that new payment, which is principal, interest, tax, and insurance, everything in. So that's probably the biggest misconception that I get, and where on the commercial side, you guys might look at it a little bit differently, on what you can actually count there and stuff like that.
Sure.
So,
What about using an LLC or corporation?
yeah, that's a no. Basically, honestly, that's just a flat no.
Right.
With Fannie Mae fixed rate loans, they can only be in the name of the individual. So I had to give you an example. I had one of my customers call the other day and said, well, they want to buy the house, but they have it set up and they want to refinance it. Well, the house is the name of the LLC. I said, well, the only way I can finance it is if you pull it back out of the LLC, put it back in your personal name. And there's certain timing rules that you can convert it back, or you can convert it to an LLC if you've done fixed rate financing. But it can't be the LLC. If I have the house financed now in my name, the LLC name can't be in my name and John's name. It can't be
Right.
It can't be split up that way.
Yeah.
Now you can, if I'm the only sole member of the LLC, or maybe the house is in mine and my wife's name currently, the new one can then convert it over to LLC that's mine and my wife's.
Yeah.
So there's a bunch of regulations in there, and we could go on all day of what ifs, until I look at every single deal. It seems like I tell people no a lot of times just because they can't do that.
Right.
Well, I want to do this. Well, I should be able to do this, or they want to buy that rental property with no low down payment or something like that. The new normal now on a rental property is 25% down.
Oh.
That is it. If you're not putting 25% down, you're getting gigged on the rate. Honestly, is what happened. Rate's always going to be 0.5% higher, more or less than what primary is, but it better be 25% down.
Yeah.
So.
Yeah. So what about the difference between rate on your? Is that what you were saying on the?
Yeah, about
primary house?
a half percent in general, about 0.5% higher.
And then what kind of term is that?
You can do 30 years.
Oh, okay.
Yeah, you can do 30 years. So, in fact, it's so crazy the way almost call Fannie Mae pushes their certain rates out. You know what I mean, and what the buckets they want you to fall into. A lot of times that I have a lot more leeway to put someone in a 30-year rate without them having to pay extra fees or extra points to get a rate. I have more, I guess I wouldn't call it margin, but a bigger, broader spectrum to put them in a 30-year loan than I do like a 20 or 15 or a 10. So it's easier. I can build the cost of doing the loan into the rate is what I do a lot of times. So, and that helps. That helps most people because nobody wants to pay extra fees or points to get a loan.
Something that I just realized, there's a couple terms that you've thrown out a few times, and I don't think a lot of people understand what they are. What is Fannie Mae, Freddie Mac?
So Fannie and Freddie are both entities that basically they're originally started government entities. They're supposedly semi-private now, but basically that's where we get all our money from. So every fixed rate loan that we do is funded by, ours are all funded by Fannie Mae. Certain banks use Freddie Mac to fund those. But basically that loan is actually sold to that company, although here at Prairie State we do retain all servicing rights to that loan. So customer still makes their payment here. We take that loan, we sell that loan to Fannie Mae. We service that loan. We collect that payment every month. We take care of their escrow account, so on and so forth. A lot of times in the big bank world, or let alone the broker, what I call the broker mortgage world, that loan is sold. A lot of those loans are sold several times.
Yeah.
And then you hear horror stories where people don't know who owns their mortgage and
Right.
where they have to make their payment to.
Yeah.
Let alone, heaven forbid, if they have a problem
Right.
Yeah.
with that payment, they have they can't get a hold of it, they can't get a straight answer, that kind of thing. But I probably should preface what the Fannie and Freddie are.
Yeah.
And there's also VA loans, FHA loans, and rural development loans. And in the market right now, I'm not seeing near as many of those as what I did 10 years ago. Especially since, or basically like the Fannie Mae's has lightened up some of their Some of their lending guidelines in some cases allows a lower down payment and stuff like that. Where I would always send those FHA, which is Federal Housing Authority. Sometimes think FHA is first time home buyer or something. It's just Federal Housing Authority. But I mean, even 10, 12 years ago, I was probably doing more FHA loans than I was conventional loans. Mm-hmm. So, and there's pluses and minuses and down payment differences and stuff like that. And then we can start talking mortgage insurance, PMI, and there's difference in all that. It used to be rural housing was a huge, in our market. I mean, down Gerard Burden area. I mean, at one point in time, we had a full-time lender down there, and just basically would do about every house in town. But those guidelines, the rural housing guidelines have really stiffened up a little bit. And it used to be a whole lot easier to do, get seller concessions too. That was always a big thing,
Right.
Person doesn't have enough down payment, to get seller concessions. Well, the market we're in now, no seller wants to pay a buyer's closing cost.
Right.
I mean, it happens so. I think I've seen one in the last 3 years where a seller
That's crazy.
was given a concession.
Wow.
To help somebody with their down payment, not their down payment because they could never have to count with that, but with their closing costs. And we just don't see it.
Right.
No, it just doesn't happen just because of the way the market is. The market's so tough.
I think it's easy when you haven't gone through the process of buying a home to assume that it's a pretty cookie cutter process. And I think this conversation is just as good of evidence as any that it's really important that people get to meet with you very early in the process and start having the conversation. Right?
Yeah, absolutely. Because I see so few what I call straight down the fairway, where there's something just said,
right.
Guess what? The person already has their down payment. Their credit's already in great shape. We know how much what they can afford, how much what they're going to put down. We have all that information. They're a straight W-2 regular income, no overtime, nothing like that. Few and far between.
Yep.
And really, I can't tell you how many customers I have. I mean, I might have started talking to these people 2, 3, 4 years ago, 5 years ago, whatever it might be. And they never have bought a house. Maybe they had to get all their ducks in a row, and life happens. Things happen with people's credit. It happens with their income, whatever it might be. Yeah. So
seems like this is starting to spill over into the commercial world more. I think it's been this way for residential mortgages. It seems like realtors don't even want to show you a house until you're pre-qualified.
No, those days of you not being pre-approved or pre-qualified to buy a home and a realtor showing you a home are definitely gone.
Yeah.
Which is in their best interest. I mean, why do they want to waste their time? Why do you want to waste a seller's time?
Yeah.
And there's a whole bunch of different factors, when it comes to that, which sometimes they probably should lean back on the lender a little bit, because especially when the market was a little hotter in the last 2 years where people were, saying, well, even the house doesn't appraise, I'll still buy it and I'll pay the extra money. Mm-hmm. Well, that's all fine and dandy if they have the extra money.
Right.
So it was so hard to get a house there for a while. It'd be like such a bidding war to get some of these houses and say, oh yeah, if the house appraises $20,000 short, I'll still buy it. Well, that's great if they have the $20,000 in cash. Mm-hmm. But if they don't, guess what? Then we're going to turn them down anyway. Yeah. So luckily, never seen very many of those. But
what's going to solve this problem that we're in right now? Is it just building more?
Time.
If rates. What do you mean by time?
Time. At some point in time, people's life changes and they have to move. I think that's the only thing.
I think people just in general are settled too much?
Yeah, people, and that's exactly what it is. But at some point in time, you're going to get married. Somebody's going to pass away. Mm-hmm. They're going to get married. They're going to have more kids. They're going to get divorced. Whatever it is, that kind of thing happens. And that's the only thing that really, I wouldn't say cures. It's going to be time. At some point in time, all that loan money is going to be gone.
Right.
Now here again, some of it you may not see for years, but I've had a lot of customers. I'm never going to. I can't remember how many times I had customers say, "This is my last house. I'm never going to buy." I've had 80-year-old ladies tell me that this is the last house I'll ever buy, and then a year or two later they're coming back in. Well, I really like to do this or this change, that change, or I need to be closer or I need to be farther away from my kids or my grandkids, whatever it might be. Yeah. But you have that. But all this stuff at some point in time is going to recycling. There's no magic fix. Magically, rates aren't going to fall. It's going to be so much more affordable. It's just not. Well, hopefully it doesn't happen. Because keep in mind, whenever we saw rates really dropped, it's usually something bad is happening.
Right. Screws up the market.
That screws up everything.
Yeah.
Something bad has
it's
to happen.
It's to balance something bad out.
Right. It's trying to balance out.
Mm-hmm.
Whenever treasuries were basically zero.
Right.
Of course, then you got zero for your money too, for your savings.
Exactly.
So those really bad economic things. Inflation doesn't seem to be. Inflation's actually, even though inflation's a bad thing, inflation's actually pushing mortgage rates up sometimes rather than down. Because it's just following what the market will bear a little bit. But it's just all crazy.
Yeah.
I wish I could. Thousands of economists, whatever the heck you want to call them. I'm sure they say every day. I wish we had just a magic bullet to cure it.
Mm-hmm.
Yeah.
But it's going to just take a lot of time. There's a lot of stuff that happened in those couple of years that really messed up everything for years and years to come.
Mm-hmm.
I think as community bankers, we could probably sit and talk loans all day because that's what we do. It's what we love to do, is lend people money. But I don't want to get out of here without talking about the Springfield ABC, the American Business Club.
Sure.
I know you're really passionate about it. I know you're kind of heading things up this year. Tell us more about the mission and why you're so proud of it.
American Business Club of Springfield is a very unique organization. We're part of AMBUCS. AMBUCS is a national organization.
Mm-hmm.
As a national organization, they were founded, I believe, it was like 1923, 1924. I can't remember exact what year it was. Mm-hmm. Our local chapter was founded 1925. Here in Springfield. So needless to say, that's 100 years that we've been around. We just celebrated our 100th birthday. We are really huge within the community. So we handle it. Our biggest fundraiser by far is what we do, our partnership with the Illinois State Fair. So with the partnership with the Illinois State Fair, we currently run all of the admissions into the fair. So if you go to the fair, you're having something to do with the ABC of Springfield. If you go to the grandstand, you get a beer. You're having something to do with ABC of Springfield. So with those partnerships there, we raise a lot of money. And that's all there is to it. And those 11 days of the fair, we'll raise a whole bunch of money. Well, what we do is we take this money and we basically give 95% of it away. Of our net proceeds, that's about our cost of doing business, for regular memberships around 5 to 7%. The rest of the money we're basically giving away. So, and these all go to community projects within the community. So our biggest per se program is our Amtrak program, where it's adaptive tricycles for children that are physically challenged. So. And we have a lot of good stories there, and we've seen a lot of kids, come in lots and lots of times. Kid comes in a wheelchair, leads on a trike. It always gets me choked up just thinking about it.
That's awesome.
We just had one where we gave away. It's through a partnership with Springfield Clinic, where they basically set everything up for us. We bought the trike as a kid that was born without 8 legs. I mean, you think of this, it's just amazing,
Right.
So this bike, it's hand crank,
right?
It's just hand crank,
yeah.
And he just gets on there and he just goes crazy, Hopefully, by the time this video comes out, we'll also have that video to share through Springfield Clinic and stuff like that. That's our biggest thing, but not only with our Amtrak program, and that's really, through the Amtrak program, we never know. We had such a hard time during COVID and getting that whole market back, and trying to transition to making the bikes in America, stuff like that. It got slowed down by COVID. But with that program, it's kind of a small portion of what we do. So with the state fair, everyone that we have volunteer organizations work for us at the admissions into the state fair. So that might be a church group, it might be your baseball team, it might be a sorority or fraternity, whatever it might be. So, and what we do, we can't pay them a salary. I mean, that's just all there is to it. The model just doesn't work. Right. So we donate. They come in, they volunteer their time. We donate to their organization. So after the fair last year, I think it was right at $120,000 we gave to local organizations.
Oh, really?
And yeah. So these
That's
aren't
really cool.
Yeah,
I didn't know that
That's
part.
a big chunk of change.
Yeah.
Yeah.
Okay. You couple that with last year we gave over $110,000 to other nonprofits. Think of your Silver Centers, your Contact Ministries, whatever it might be, other community organizations that are helping. What our main goal is to help those that don't have.
Right.
That's the whole idea there. So we want to help those people out. So we give that away. We also put another $80,000 aside last year for what we call our legacy fund, which is through the mess up the name on there, community center. I can't remember what the name of it is now. So we'll get that, but it's through a local charitable organization where they'll hold money and invest it for us.
Is
and
it
stuff
the
like
Land of
that.
Lincoln Community
Land of Lincoln Community Foundation.
Yes.
I couldn't remember exactly what it is. So in total, through the money we raised last year, with the Community Foundation, Amtrak's, both our charitable giveaways. Boys and Girls Club had a disaster of a problem. We threw another $30,000 for them. So total a little over $350,000 that we gave away last year. We've already started this year out our charity day for the very beginning of January. We started with $135,000 right off the bat.
Man.
Okay, so what's funner? Lending people money or giving people money?
It basically it kind of gives you the same feeling. It really does.
Yeah.
Because you're helping something. You're helping person. It's I don't know. I guess it's more rewarding, from a personal standpoint, to actually give someone and know that you're making a huge difference.
Yeah.
Right.
In their lives and all these other people's lives. And you talk to all these organizations within town. So, but members pay a fee to be in ABC. A monthly fee to do so, pays for our lunches and happy hours and things like that we do. Basically, I always say, we great group of guys, and we raise a lot of money. We have a lot of fun doing it, and we love giving it away. That's just all there is to it. And I would say by far we're probably the single most. I think we make the single most biggest impact in Springfield within our community.
Awesome.
So it's my preference. Of course, I'm president this year, so maybe I'm a little partial.
That's okay.
Partial to that, but it's a big deal.
I love it.
Is. So, and it really all plays together. I always tell people, it's like the people I meet, within the bank, they might help part of the ABC, and part of the ABC people I meet help with the bank.
Yeah.
It all Springfield's
Absolutely.
a big little small town.
Yeah.
Kind of.
It is.
Yep.
So it all intertwines with everything. It all comes around at the end of the day.
Yeah.
So.
Well, tell folks how they can stay in touch with you on the Prairie State Bank and Trust side, and tell folks how they can stay in touch with ABC.
Yeah, anytime. I always tell people, you want to get a hold of me, call me or text me. That's not a problem. Personal cell phone's always best. 217-825-3300. That's always best. They can email me here at the office on either thing, ABC or the bank. The bank really wants us to do more stuff in the community, so they support my efforts. If I have to be out of the office for an hour to do something at ABC and help volunteer or something like that, they're always support that. So they can always email me at the jboster@psbank.net.
Awesome.
So, and get a hold of me that way too.
Does does ABC have socials? You guys have LinkedIn?
Yeah, and we have a
Facebook?
Cool. There's a public page there and stuff like that
Cool.
where we announce what we're doing. We also do a scholarship program every year for local therapists.
Awesome.
Basically, we give money away to the therapists that are helping kids with the Amtrak's.
Got it.
So that's
okay.
another big. I think that number last year was like $15,000
Very cool.
that we give away. But we're always looking for opportunities like that.
Awesome.
To do that. So, and they can look us up on Facebook. Just look up ABC Springfield. Just punch it into Google, and you're going to find us.
Awesome.
No further public page out there and stuff like that. Has information on the scholarships, information on the charities, how you can volunteer, how your groups can volunteer out at the fair, and
Awesome.
and stuff like
There's
that.
information on how to become a member too. Probably.
Yeah, information on
Great.
becoming a member. All membership, you have to be sponsored by an existing member.
Great.
So it's like basically, I don't know how to, but you want good people in there. They're going to be a little bit picky. Not picky per se, you know what I mean, but You want
You got it. So
I got
yeah.
it. It can't be that hard. But you want good people that are going to do something.
Right.
There's some guys that never participate in themselves in anything, and there's that just pay their dues, which is fine.
Mm-hmm.
But we want people that actually want to make a difference in the community.
Love it.
We don't want Joe Schmo that's never going to do anything at all.
Why'd you point at me?
I don't know. just happened to that way. So.
All right.
Well,
awesome, Jerry.
Thank you, Jerry.
Yeah, absolutely.
Appreciate
Hopefully
your
it
time.
didn't run on too long today.
No.
Perfect.
And it'll all work.
Mm-hmm.
All right. Thank you for having me.
Yeah.
Greatly appreciate it. Didn't even drink my water at all.
You like water.
So
That's when you flick the cup over at the end. Nice work, sir.
The Vault, where Central Illinois' best kept stories are held.